Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, October 3rd, 2017. This is sort of a pre-market update, just a few of the things that I'm watching today, some things that stand out, maybe short-term trading ops for those interested. So let's just go through these charts, couple miscellaneous items here. We'll start out with gold futures. Take a look at the euro and GDX as well. This I posted analysis on this yesterday, so not a whole lot has changed since then. You can see here we have we had a divergent low here, pointed that out, and we did get a pop, and that hit. I had these three, uh, you know, possible price targets where I had expected a reversal at any one of those. So we had a reversal at the earliest one so far. Now what that's done is two things, and that in itself is pretty bearish at the breakout of that little small wedge. You can see the downtrend line only popped to my minimum target, reversed right there, but it did, what it did do is put in another divergent low. It's really an extension of that same divergence that was in place. These are consecutive divergences here. So again, it's how you want to trade it. So far, we had a falling wedge here with divergence on the MACD. That led to a little pop. So if you're a quick trader, you can game these bounces via gold futures, GLD, GDX, or any of those leveraged ETFs. Get in and out, but I don't see right now the case for a much longer swing trade. Now, anything is possible. So if you are a gold bug, you're bullish on gold, you can go long here soon. Maybe now the divergence is in place, but I would wait for a few triggers. But if you did, you can set a stop at break even and let it ride. So you never know when the bottom's in. But right now, like I said in the analysis yesterday, and I've been saying for a while, I do expect a little near-term upside in gold here soon, another counter trend rally, and ultimately more downside. My analysis has been based, predicated largely on my analysis for the U.S. dollar. I'm sorry, for the euro U.S. dollar pair. So again, this chart shows you the euro against the dollar. So when prices are rising here, the euro is rising against the dollar, meaning the dollar is falling. That's bullish for gold. When the euro U.S. dollar pair falls, that means the euro is falling against the dollar. Dollar's rising, that is not good for gold. And you can see the correlation has been very strong. We broke this trend line and gold has been moving down since. And it's, that historically there's a very tight correlation. I mentioned at times it can disconnect, but trying to trade by ignoring what the dollar is doing, trying to trade gold, it's futile. More often than not, if you can get the call on this right, you're going to get the call on gold right. And that's been the case recently. So there was a divergent high in the pair, very well-defined trend line. The better a trend line, the more defined it is, the more likely you're to see a decent reaction, which we did. Once that trend line broke, you can see impulsive selling. We fell the first time just slightly shy of my target. I mean, you could essentially say it was hit. We did get a bounce there. We bounced up to my bounce target zone, and now we've come back down to it. In fact, we hit it almost to the penny this time around. If you look at let's see, a 5-minute chart. There it is. That was that pullback low. I'm just zooming in here to 5 minutes. There's a 117 level. As far as currency trading goes, it doesn't get much closer than that. So that's a tag of that 117 target, which is now official. There's the reaction. So we've had, you can call it one reaction, or we're certainly there now. And again, yesterday, although I favor a break of that level ultimately in a move down, we may get another reaction here, especially now that we've actually come in and now have officially hit that 117 target. So maybe we bounce again. Either way, it's hard for me to say if we come back up to that bounce target, if we go any higher. But I can tell you this, a solid, convincing break, especially a close below that 117 level on the pair, that would most likely open that door up to that final, move down to that final target zone that I have here, which runs about, 114.6 up to about a dollar 15, 115, point 0.3, somewhere in there. And again, I'm also open to all possibilities. As I said, my overriding, um, factor right now in looking at the euro, US dollar, and gold is the longer term chart, which is this weekly chart. This is a 10-year weekly chart. And what you have here is a multi-year basing pattern. You can see all the way from about late 2014, early 2015, 2.5, nearly 3 years of sideways price action consolidation. We made a divergent low when we threw down to the just below the bottom of that trading range there outside the box. That was very strong bullish divergence in place. When I see this on the weekly chart, this has much longer term implications. This isn't just a swing trade for a few days or weeks. Already it has proved to be. And I've stated that before, after we broke out, at least in the early stages, that I expected any pullbacks to be relatively minor, bought up quick. That was the case with the earlier pullbacks. However, we became extremely overbought there. We have a high level bearish PPO crossover. So again, ultimately, I will maintain my expectation as of now, that we continue to work down. You can see it's right about that 115 level, so that meshes with the pullback target that I had on the daily chart. And it's just a matter of when you're really trying to hone down timing. How far is any bounce going to last right now? Hard to say, but again, uh, this is where I'd really be interested in, accumulating the next long-term trend position for gold and the gold mining stocks if we get down to the 115. So that's plan A, we'll call it. And in trading, you always have plan B and plan C. Plan B is what happens if you want to, catch the next move up in gold mining stocks. Well, what happens if we never get down there? You're going to miss a position, so you just have to watch the charts here, see what develops. Maybe there's a tremendously strong bid under this pair, and this correction, just as soon as it looks like it was getting going, meaning right now, boom, maybe it's over. So if that's the case, we'll watch the charts. We'll go back to this daily chart here. Watch this and watch what happens here on the price action. Did we defend that 117 level? Do we move back up and above that bounce target? Ultimately, do we regain this trend line? Those are all the things we'll look for. But as of now, you can see the PPO has just crossed down below zero. RSI isn't yet oversold. Now that's normal in an uptrend. Oversold readings on the RSI are very rare, and if you get them, they're very fleeting. So if again, this is the beginning of a new, much more powerful, lasting uptrend, then oversold readings will most likely prove to be a very good buy signal. Of course, coupled with other things as well. But during a primary downtrend, oversold tends to become more oversold, meaning deeper down below that 30 level, or you get these consecutive readings, you can stay oversold for quite a while. Likewise, in an uptrend, overbought, you can see a lot of overbought readings here, a lot of thrust up above that 70 level, that red line. So during a primary uptrend, overbought tends to become more overbought or stay overbought for an extended period of time. Okay, and here's that GDX 60-minute chart that I highlighted yesterday. We had this descending price channel. We did get a pop above there, hit one of those resistance levels slash targets, turn back down. So now this is the level I'm watching right here. It's not super well defined. We do have three reactions so far. We do have divergence. You can see the divergence pretty clearly down below. You see prices making a lower low here, all the indicators making higher lows. So a pop of that level, and as I mentioned yesterday, these would be my targets, about 2350, maybe up to the 2391 area, and ultimately that would be a high-end target about 2415. I don't think we're going to get much more than that right now, but again, like I said, it's all, if you think otherwise and you see an objective long entry there, you can set stops below this recent low. You can see this line here. There's quite a few reactions to the left. So this is a pretty decent support level. So again, whether you want to trade a short-term bounce or if you're a longer-term trader investor, just wait to the charts um, indicate a higher probability entry in gold and GDX. As I said right now, mainly based on the euro US dollar, I can make the case for more downside. That's the way I'm leaning right now, and maybe a little near-term upside here before the bottom. Okay, moving over to crude. This is CL crude futures. This is a 60-minute chart. Yeah, a 60-minute chart going back 2 months. And you can see there's an uptrend line right here at the high. From this point to this point, you made a higher high, and you can see the steep negative divergence. I believe that was pointed out last week. So from that divergent high, we went on, had a pretty sharp correction, little drop there down to the trend line, danced along the trend line for a little bit, and then broke down. And you can see the impulsive candle. Again, that confirms the validity of that trend line, that it was a well-watched level because we hit it, we consolidated on it. little flagging type action, if you will, and then another thrust down, and we're consolidating again. That 50, 78-ish level looks like was a pretty significant resistance level here. We broke resistance. Resistance once broken becomes support. So we went down and we smashed below it. So now we have to take it out from above. So call that 50, 80 or so on CL if you're a futures trader, or even if you're trading one of the ETFs like USO, OIL. Always I think it's a good idea to keep an eye on the crude futures along with those ETFs or ETNs, I should say, in the case of crude. So that's the story. Near term, right now, it's bearish because we're sitting here. We just recently broke from that trend line there, and we're sitting under a resistance level right now. And I can see the next thrust down. We do have support here about 49.80. I could see that. Hard for me to say where it's going looking at the 60-minute chart. I'll have to look at a daily chart. But again, I'm favoring a little more downside, especially in the energy stocks. I'm not so hot to trade crude right now. I don't see an objective entry. But the energy stocks, even though they will follow crude, let's just take a look at those real quick. Okay, starting out with XOP, because XOP was a recent trade idea. I was bullish on energy stocks for a while and used XOP as the official proxy for a long. We recently, just a couple weeks ago, hit the final target for 10% profit. I had a potential third target on there, which went on to be hit. And then just last week, I guess it was, I then put up this post here. Crude oil and energy sector poised for a correction. So we have a couple charts here. The daily chart, which you can see, I have a slow internet load right now. I have a guy coming out to work on that again today. Potential third target was hit, and then I stated we're looking probably at a pullback here. Put up this chart on a 60-minute time frame. This is a 60-minute XOP, and when you see these arrows, sometimes I'll draw the counter trend bounce up. You have a target zone there. That means I expect a bounce, and then afterwards a continuation of the downtrend. I don't always draw the counter trend arrow, but that's what that is. So that was last week, and let's just look at where we're at today. That's exactly what happened. You can see there we broke the trend line, that rising wedge pattern. It was confirmed with negative divergence, a little bit of a back test, and then boom, kissed it to the penny. You can see that red candle right there, right on the top of my target zone. Same lines I was covering, the bottom of that gap there is the top of the target zone. And so we have a reaction off the first target, which is exactly, what I would expect. And now from here, I think it's time. We've had already looks like this counter trend bounce is about satisfied. You know, just eyeballing it based on the pattern, everything else. I think that's probably come close to running its course. So what you want to look for now is a move back down. Maybe we flirt with this area again, maybe the bottom of the target zone, maybe not. Either way, I think you can put a swing trade on here, short on XOP with a stop not too far. Let's just give it a little room because this market has just been plagued with stop runs. I have no doubt that that's a lot of what this program trading is all about, uh, chasing after and blowing out the retail trader stops on on objective levels where they should be placed, where it used to work. So you got to give it a little bit more room above that, is in my opinion. And also, measure it out to what your target is. So if you're going down here for a swing down to that second target around 32.30, we're at 34.28 now. Just calculate an attractive risk to reward ratio. I like ideally 3 to 1 or better, but it all depends on the trade. Anyways, that's my expectation for XOP, which is the S&P oil and gas exploration and production ETF. There is some overlap with the components in XLE. You have stocks like ExxonMobil, Chevron, ConocoPhillips, all those. I probably should look at the daily on XOP as well. Keep in mind, this again was a chart. We took it long somewhere down here, and that was a near vertical. I can't remember exactly where the entry was, but must have been down there because that was my first target up here. So it was a near vertical run up there, very overbought. If you look down here, look out, the RSI just hit levels rarely seen, almost an 80 reading on the RSI. You can see the PPO is pretty high up now, rolling over. You can see that it hasn't crossed yet, but I think it's safe to say we'll probably get a bearish crossover, and that could lead to a pretty decent swing trade. Again, the primary trend, this breakout and everything makes me longer term bullish on the energy sector, and as such, any short side pullback trades, I'd err to the side of caution, go for the shorter targets, not try to go for the big pullback unless the charts tell us otherwise. But right now, longer term looks good, so a pullback to maybe that former second price target. Again, I'll have to go off the 60-minute charts. I already gave you those targets. I just wanted to show you that the daily chart confirms that, this was an extended run. Again, still looks good longer term, but I think the energy stocks need to come in here first for a little while before continuing higher. XLE, you can see a very clear pattern. There's a very well-defined uptrend line. Lots of reactions. Look how many candlesticks, perfectly defining that candlestick. That trend line. Very few, if any, candles piercing below it, and then boom, a big red impulsive candle yesterday. So that one looks like it's coming back in. High level bearish PPO crossover pending, hasn't yet occurred, but you can see the signal line or the PPO line rolling over, extremely overbought, just like XOP. Remember, there's a lot of overlap between the two. And if you look at the 60-minute chart, I believe I posted this yesterday as well. Same story at XOP. You have a rising wedge confirmed down here, negative divergence. Trend indicators about to cross into bearish territory. If we do see any more downside, hasn't been bearish since back here. It's been bullish all along throughout this uptrend. So there's one other, let's say, check mark to make the bearish case. And of course, for a deeper correction, you want to see this PPO, especially that 9 EMA cross down below the zero line. So right now, the trend is still up, but we've broken that trend line. That I give a lot of significance to. We hit the first support level. I did not have this line on the chart yesterday, but that meshes with the XOP target zone that I had, and I had posted that last week in advance. You can see a reaction there, a gap as well, and that's what we hit. So we broke down, gap down, hit support on that gapping candle, after the gap, and bounce back up to back test. So this looks, and you can see a confluence of resistance right here. If you zoom in, you look at all these candles. So XOP, let me see, pre-market. Let me look at another monitor real quick. Oh no, XLE. Yeah, XLE looks right now like it's about to open about flat. I'm looking at pre-market trades on another monitor. So there's still an entry to be had. And like anything else, they may want to try to pop and run the stops for anybody that sees this setup, because it's such a textbook perfect short setup, that they might try to pop it up in there. So if so, you want to probably put your stop above that recent reaction high, maybe a little bit above that. Give it a little bit of room, because I think you can swing this one down, oh, no problem, to 67 is from what I'm looking at now. There's nothing guaranteed, but I think that's an easy and very likely target. And let me get that line out of the way so I can give you a measurement tool. And that's a 2.25% drop. Now you leverage that up with one of those leverage ETFs. For a quick trade, that's the only time I would use those personally, like ERX or ERY. And you get 3 times the 2.25. If it happens pretty quickly, you should, and that's not a bad trade. Okay, moving on to just a few more and we'll wrap this up. Not exciting, but there's those ag commodities. We still have 2 of those as official longs and have for a while. They're both profitable. They're doing well, but they're just steady Eddie, performers. I think I even put a higher than 1.0 beta adjusted position size on these, because there are times you can see these things really soar, at least in a strong uptrend, but day to day they're not going to swing too much. You're talking about a 1% price swing is the norm, usually on the outer end of these moves. So these are wheat futures. I should have clarified. That's CW wheat futures. And here was the downtrend. We broke the downtrend, and we've been in a clear uptrend since. Now we did have this 60-minute. You can see the bullish divergence here. You can see I only have what is that? The PPO up here, or MACD, one of the two, and there it is. A bullish divergence at the lows, and that's really signaled this trend change, which we've been in here. And we did have bearish divergence right here on this 60-minute chart we're looking at. We had an uptrend line we broke down, but here's a pretty significant support level. That's about 438, and so far that level is held. And longer term, I think the charts of wheat still continue to firm up. The actual trade is on WEAT. By trade, I mean the official trade idea. And I really wanted to see it stay above this 660 level once it took it out. We did fall below that recent. We're still above the stop. Still profitable in that trade. I believe. I'm pretty sure. I'm actually using ZW on my own as my own personal proxy. Wheat futures are up today, so we may regain that. The one thing I'm watching here, I want to see this PPO. It looks like it's starting to roll over down right below the zero line. That zero line does a good job of defining the trends. Bullish when above, bearish when the PPO is below. So I'll keep an eye on that. And maybe raise the stops on this trade, maybe pull the plug if price action doesn't start to firm up soon. Otherwise, we may be looking at another thrust down in wheat. Maybe put in a marginal new low, maybe put in divergence. I'll draw it out for you, something along these lines. Let's just use this tool. It's an arrow tool, but just bear with me. So a little more downside there. I'm going to draw this as if it's a trend line, some divergence there, and then we reverse. That would put, if we made a new marginal new low, that would be a divergent low. So sorry, I'm just being lazy, not grabbing line tools. That would be a line that would show you a little punch down, briefly take out these lows right here, the previous reaction low, put in bullish divergence, and that would make for a very powerful setup. So um, if I decide to pull the plug on the wheat trade, we'll be looking to re-enter that if that scenario sort of shapes up like that. And the other commodity we're currently is an official long trade idea is NIB, which is the cocoa ETN. And there's the parameters, a stop there. I can't remember where we entered, but it must have been somewhere over here. It's doing good. In fact, we almost hit the first target. We're very close. Yesterday we came within. We hit a high of 24.90. The first target's at 25.12. So a steady eddy, but again, the bigger picture is this is a basing pattern, it looks like. And finally, if we break out of there, especially if we take out that T2 level, that would be that reaction high there. There's a cluster of candles there. So that's a pretty significant resistance level, and that would open the door potentially for a move up to this long-term target zone. So there's some long-term potential here, but first things first, let's see if we can get up here, maybe book some profits. I'm considering it, depending on how the rest of the ag commodities do. Now, they all have their own unique fundamentals, but they trade a lot. Some of these are dollar sensitive. And most importantly, again, if the majority of these ag commodities are lagging or still not picking up steam, I may both personally and officially take full profits, book full profits here, and just move on if I think we're going to get another pullback and more consolidation down here within this basing pattern. All right, let's just wrap this up with Apple. Apple's an unofficial trade idea. I've been mentioning this one since it was within the bearish rising wedge pattern up here, right off the highs. Broke down, has had a pretty impulsive sell-off since. And if you've been tracking this one, my first target here was at 154. We hit that level. That's also support, former support, now resistance. So we went down, we reversed just above this other 148.20ish level there, have bounced back, and that's been 5 consecutive candles struggling, attempting to break back above this level. So that's a couple things. Number one, that tells me that is a significant valid level. I mean, it's very clear to me back here. You had a reaction here, pull back there, a gap above that level, uh, quite a few candles over here. So now this, and it's a range. Intraday, Apple just tried to pop above it, but it's closed either right back on it or right down below it. So again, watch this. This is a battleground for Apple. You have the moving averages curling down, turning down here. PPO looks like it wants to curl up and make a a bullish crossover, but sometimes you'll see these lines touch and then you see a rejection. So interesting. Just keep an eye on Apple because as you know, if you guys have been following this, my primary scenario, and it's still my primary scenario at this time, was exactly what's happened. A move down, well, maybe a reaction there. We didn't get a reaction on the first one, but most certainly because we went right through that first support level, a reaction there, a bounce, and then a move back down to my, preferred swing target, which is 142. And that's going to have some implications on the broad markets most likely, especially the Nasdaq 100 QQQ and even the SPY, as Apple's the largest holding in both the S&P 500 as well as the Nasdaq 100. So, and we'll just take it from there. I can't right now forecast what's going to happen if we get to 142. Will that level go? If it does, there's a big gap potential target zone all the way down here around 123 to 127. How what happens again, assuming we even get down to 142? Well, how do the intraday chart look? Intraday charts look. How do the other, leading tech stocks, big caps? How do the indices themselves look? QQQ, SPY. A lot of other factors will go into that. Tech in general. Watching trend lines on the semis, we still haven't broken below those trend lines on the SOX and SXD and SMH, those three semiconductor ETFs, as well as XLK. So I'm watching all those trend lines. Right now, they're They continue to hold on every test we've had so far. And so until and unless that happens, I cannot get too excited on a a short trade on Apple, or expect a lot more downside than maybe a pullback to that 142 level. But again, we'll watch it. As I always say, the charts are dynamic, and therefore so is my analysis. So let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you have a profitable day.